Hello and welcome. My name is Sonny and this is Financial Mastery, the #1 channel where we talk about financial literacy and money mindsets. And in today's episode, we will talk about the election results and the implications that it has on the equities and crypto markets. So without further ado, let's dive straight in. You may or you may not know already, but Trump has won the elections against Kamala. He has gotten over 270 votes and he will be the next president of the United States of America. Now, either way you may like it or not, what are the implications on the equity and crypto markets going forward? What can we expect in Q4 and what can we expect at the start of next year? In this video, I will try to give you a short overview about these topics. So let's take a look at why a Trump victory is actually good for crypto and also for equity markets. Well, the very first thing is that Trump is a very pro-business person. He has made it public that he likes to promote economic activity and businesses in the United States. So basically, traders and investors, they like his pro-business stance. Second, he also talked about Bitcoin in his elections, and currently the United States have confiscated a certain amount of Bitcoin and they are holding it. They can liquidate it at any moment for US dollars, but Trump has made it clear that perhaps they would keep on to those Bitcoins and they may add to them in some kind of reserve status. This basically means that Trump will not be selling those Bitcoin, but they will be holding on to their stack of Bitcoins, which could imply that the United States makes money on holding those Bitcoins in the near future should Bitcoin prices continue to go up. This is actually very positive for crypto holders because it shows that the stance of the US government is changing. It's becoming a lot more positive towards cryptocurrencies. Another good aspect why Trump is good for crypto is because he has promised to fire Gary Gensler on day one, which is a really good development if you are a crypto holder, because Gary is very hostile against cryptocurrencies and the SEC, where he is working for, are causing many problems in the crypto space. Another reason why Trump would be a good choice being a winner is because there will be a more regulated approach for crypto going forward. He will also cut taxes and do a new implementation of tariffs. If you want to know more about these topics, then I advise you to research them by ChatGPT or Google. But all of these are reasons why it would be really good for crypto that Trump won. So what do we see in the markets? In the left upper corner, you see the Bitcoin graph. And you can clearly see that since roughly the mid or end of March 2024, we have now broken the highs once more. Over 6 months later, and today on the news of the election wins, Bitcoin surged upwards towards 75,397, which is basically a new all-time high. Will Bitcoin hold these prices? No one knows, but there has been a breach upwards and it's basically showing the positive sentiment of investors on a Trump win. In the right lower corner, we also see the SPX making a new high as well. So, as I mentioned earlier, investors anticipate a positive reaction on a Trump win because he is pro-business, pro-economy. What happened last time that Trump won and what happened to the crypto cycle and crypto price actions? As you can see on the left, in 2017, when Trump won, we had a massive surge in the crypto markets. Now, there is no guarantee that this will happen again, but if we can use the past performance as a predicator for future performance, then that would imply at least we see a positive sentiment for cryptocurrencies going forward because of the stance that Trump and his policy will have. Let's take a look at some other indicators that may show you that the crypto markets are primed for some more positive continuation going into the end of Q4 or even into the start of Q1 2025. If you follow me on my Twitter, and I highly advise you to do so, you can find me at my name, Sonny Mulder. Then you know I have been posting about crypto for the last 2 years and also about the equity markets. I make the case that crypto is in a new bull cycle which has not concluded. And I also made the case in January 2023 that the equity market would be in a melt-up. I will talk about these topics in another video. So in the article, the first graph that I show you, and I will show you right here, I talk about the logarithmic growth and the Bitcoin halving and the price expectations prior and post halving. As you can clearly see on this graph, we haven't really had a surge up post halving. If you look at the RSI indicator, which is an indicator we use for strength measurements of a trend, then we can clearly see we are still in an upwards trajectory, but we have not reached our extremes which we have gotten in prior cycles. If you look at the red line on the top of the RSI, we are not even close. So this is basically one of the reasons why we could see continuation for the crypto markets going forward. If we look at another chart and we look at the total market cap excluding Bitcoin and Ethereum, then we can see the same picture unfolding. If we look at the RSI, then we have seen price tops marking a top around the red trend line. And while we have seen already a touch in 2024, currently with the current retracements, we see that the RSI has been trending very low and is still supportive on its trend line. We have reached overheated status before breaching old all-time high prices, which is indicating that we are likely in a mid-cycle correction and not at a cycle peak. If we look at Fibonacci extension levels, and for the people who do not know what Fibonacci is, this is just a specific kind of measurement for potential price targets, then we can see that in prior cycles, we roughly hit that 3.0 Fib extension level. If we would hit that level again, then that would forecast a total market cap of around 3 trillion at the very least. I personally expect we could see diminishing returns, which could imply that we see a lower level being hit and we will not hit the 3.0. That's why I put a measurement that we will see a peak between 2 or 3 trillion roughly set if we follow the upper extreme of the price trend lines. So I'm still seeing a lot of growth and we haven't yet broken past all-time highs. Chances are slim when looking at this chart that we already concluded our crypto cycle. Another chart I shared is the logarithmic growth, but this time I included a MACD, which is a very often used strength indicator, but not a regular version, but a logarithmic version because we have a logarithmic price chart as well. As you can clearly see on this indicator as well, every time on the bottom, when we had a red circle, then you can clearly see that after it pointed from negative to positive post-halving, every time we saw price increases. There is not a single time that did not occur. This adds to the RSI strength trend line, which is also pointing up, and we are likely to see more upside. And we have only just crossed positive with divergence, which implies that while we are still around all-time highs, we could see at least another push upwards. When we take another look at this graph, and this is a logarithmic rainbow chart made by Trololo, This is actually the first one. It has been developed in 2013. The current used rainbow charts are just a copy of the Trololo chart. If we take a look at this one, then we can see under and over valuations. Now, the most important line is the red line. The red line is the fair value for crypto or for Bitcoin. And we currently see that if we look at, and this is specifically for cryptos, so not for Bitcoin, then we see that the crypto market is still hovering around that same fair value level, and it has not gone to an extreme. And the extremes, they are marked with the dotted lines on top. So even when we could see a surge to new all-time highs, as I mentioned, then yeah, we may not even go into such an extreme. So we are currently sitting at a fair value, and we could easily move up above fair value. Going back to the FIB extension levels, we can see that in prior cycles, we always hit certain levels. And currently, we have not even broken out to new targets. Even when we include diminishing returns, we should see at least another move up when we look at the cycle top to cycle bottom and we make a extension. Very often, every cycle, when we look at prior cycles top to bottom, and we make a measurement, then we can see that we at least move to the 2.27 FIB extension level. We have not done so, not nearly so this cycle. This measurement alone, which has been hit every single cycle, would imply that we can move towards 130,000 US dollars for one Bitcoin. We are currently far away from this as well. Another measurement which I like to track is Elliott wave structures. And if we look at Elliott waves, and these are also structures that I share on my page, on my Twitter, then you can see that it's very likely that we have one more push to go. Now, we do not have to go all the way up to that 145 or 150 target. The push up could be a lot weaker, but this structure is clearly showing us that we are likely seeing one more push up. This is also supported by the Wyckoff distribution or accumulation patterns, and this specifically is my personal layout, which I have been sharing for a couple of weeks. As you can see, this is prior to all-time highs being breached, and this is basically what we call a Wyckoff reaccumulation. And a reaccumulation is basically a price structure which happens in markets all the time, and this is used to basically reaccumulate coins before they take off. And we are clearly breaking out towards new all-time highs if we look at this pattern. One of the last indicators that I want to share is the Pi cycle indicator. And this is one of the older indicators that I use, which has a near as good as 100% track record of calling a cycle peak. Well, this chart gives a cycle peak as soon as a yellow line touches the red line. And so far, we have not done so. We are not even close. This also suggests that we are likely seeing more upside in the crypto markets. Now, none of the things that I show you give you certainty, but I just mentioned that Q4 is likely going to be strong. At least it will be positive. All of these indications show you additionally that it is very likely that crypto prices are primed for more upsides. Now, while we have no guarantees in the markets, it is still my personal bias, which I have also been sharing on Twitter for years, that we are moving towards a higher target of at least $100,000 for a Bitcoin. If we look at the ETFs, which is another indicator I wanted to share with you today, then we can see that since March, we have seen one of the strongest inflows, and this is shared by Econometrics. You can see that clearly, while we are around those all-time high prices, the inflows are rapidly going up. So there is a lot of institutional ETF flow support coming our way as well. As more people look at this data, you will have some kind of self-fulfilling prophecy where people just buy things because everyone is positive, and this basically leads to euphoria in markets, a state where everyone is bullish, everyone is buying, everyone is holding, and that is often the emotion in the markets that mark a cycle peak. So currently we will see a period of everyone being positive in crypto after the Trump's elections, Trump becoming president. And I believe we are entering the last phase of our crypto cycle. I talked about crypto, but I also think that it is very important to talk about equities. What can we expect for equities in Q4 and Q1? So for the people who may be following me on Twitter, they know that I made this personal Excel file where I share all economic data every month. I have been talking for months on X about deterioration in the markets, and this is a very easy to follow chart actually, because when we see these data points, which you can see on top, Fed funds rate, the yield curve, unemployment, CPI, GDP, etc., all these are very crucial to see, can equities continue to surge up, or are we entering a recession? Now, it is my base case already for 2 years that around October we would see massive deterioration, because that is just how the cycle goes. Whenever the Fed raises rates, we have a roughly 12 to 18 months delay before we see the effects of that on the economy. And we are currently seeing deterioration. So if you look at green, then the data is looking healthy. If you look at red, then you can see that the data is actually deteriorating, going backwards, going bad. And as the Fed has been cutting rates and will probably cut rates again this week, we also see more red popping up as time progresses. And this is very concerning, because it has been my base case that we will likely see economic weakness. We are very likely to see, at least with a chance higher than 50%, that we will see a recession occur sooner than later. Now, what am I expecting for equities? Yes, we are seeing deterioration, but we are also seeing other signs which are positive. So we are currently running in a two-speed economy. One side, we have manufacturing, consumers being weakened. They are feeling the pain. They are feeling the inflation, the higher prices. They cannot pay things. That is factual, that is present. On the other side, we have businesses and earnings still running strong. If I can show you here, you can clearly see that the earnings for the third quarter are almost all present. We have already 70%, 74% reported, and 77% of those are beating their earnings estimations. And this is actually still positive for markets. So while we are seeing deterioration and Fed funds rates going down, that does not mean that markets instantly go bad. So I will talk more about this in another video. If you like the content you have seen so far, please give me a like, give me a subscribe, because I will be posting a lot more in the future. I will try my best to help you guys understand what is potentially driving us and where we are headed. But for now, I remain really optimistic about the equity markets as the crypto markets. At least for Q4, I see continuation, as I mentioned earlier, and also in Q1, I could see continuation for both equity and crypto markets. I will talk more about that in another video. If there are other topics, other specifics you want me to talk about, let me know. Give me a comment what you would like to see, perhaps what you would like me to explain, and I will do my best to provide you with the quality content I hopefully can give you. So that would be it for this video. The Trump election has been positive for crypto, has been positive for equities, and we can expect continuation going forward. I am eager to see how high prices will move eventually after these elections, and there is more market updates to come. Take care and see you guys later. Bye bye.